I will get the doors open while we're waiting for everybody.
I'm here.
There's Peter.
Just
You
working.
didn't hear us talking shit about you, did you?
No.
All right, good. That's because we weren't. So we would not do that. So we figured open the doors a couple minutes early, let everybody get settled. I was gonna say let them get their Jimmy Johns, which thank you, Gabby.
No
But
problem.
mine's already in the fridge. So and I didn't get a nice
What
tea with
kind you
that.
get?
The spicy chicken avocado wrap.
Yum.
Yeah, it's like jalapeno chicken avocado wrap was pretty good actually.
I'm a veto girl through and through.
I do like the Vito. That's like it was my go-to forever.
Hmm.
I'm heading to the Bahamas in a month, so I'm trying to, trying to stay on the
Slow
chicken and
down.
lettuce side, no bread. So.
The lettuce wrap, yeah.
Yeah, pretty much. I don't think I could do that. I did the Vito once with just the lettuce. Ew.
Yeah.
I highly do not recommend that.
I
So
feel like it would be soggy.
it just wasn't like the Italian, the all that deli meat needs bread, like one way, shape, or form. It just
Hmm.
needs bread. So yeah, definitely for that. So that's good. So we're talking Subway and food, right? That's what everybody tuned in for, is to learn about food. Subway. Pete, did you get your sandwich? You didn't order Subway, or not Subway, but Jimmy John's.
I don't think we have Jimmy John's out where I am.
Where are you? Let us know.
I'm in Massachusetts.
Oh, you really don't have Jimmy John's.
No.
They don't serve. They don't send you the lobster roll.
No, we've got
So
Subway. We've got I
Jersey
don't know.
Mike's.
Richard, I've been on this like no bread thing since August. So you guys are killing me with this sandwich talk. Like I've got my protein here. And
Yeah,
yeah, I've been on protein and vegetables for 2.5 months, but
that's good. That's good. Is it helping?
yeah, it's been
Okay.
great. It's been
Okay.
awesome, actually. No,
All
it's
right.
been awful.
You're
It's
so
it's
happy.
helping. It's helping for sure.
Okay. Well,
Um,
that's good.
I like pizza. So
Who doesn't? All right. We will get everything going here. Hello, Dr. Vivian. Good to see you. I'm glad to see you. I know you are a knowledge sponge, so I'm super happy about that. All right, guys, we're going to get everything going here. We did advertise this. It was funny. We advertised this as a non-QM. And when I was talking to people about it and getting them in, it's like it's more non-traditional mortgage because a lot of people don't know what QM stands for. So we'll get into that in a second. But first, many of you guys are enjoying a sub and a sandwich and some chips. And that is all paid for and brought to you by our wonderful sponsor. Let's see if I can get Gabby's last name. It's Buccieri. Did I say that right? Okay, yes. Gabby Buccieri from Goosehead was our sponsor, and Goosehead and Gabby, great insurance partners for us. And I'm going to let Gabby go ahead and just talk a little bit about what she does before we get into the program.
Perfect. Thanks, Rich. Hi, everyone. My name is Gabi Buccieri, and I'm an independent insurance broker with Goosehead Insurance, and really happy to be here, be the sponsor of this event. Just a little background information about me. I was born and raised in Palatine, Illinois, so suburb area, northwest suburbs, and I attended the University of Missouri, so don't know if there's any other Tigers on here, but go Tigers. But like I said, I'm an independent insurance broker with one of the largest independent agencies in the US. So I mainly partner with realtors and loan officers to help with the insurance side of the home buying process, just to get you what you need when you need it, because we all know we need insurance to get that clear to close. So I specialize in all personal lines insurance, such as homeowners, auto, motorcycle, condos to umbrella, life, and jewelry. And we are also partnered with 20 plus A-rated carriers across the United States. So we can shop around about 85% of the market, giving us options for every borrowing situation. We can also help with clients in other states. So some things we can offer you and your clients is, oh, there go the lights. 1 second.
Oh no. She lost power. Oh, there it is.
It's that motion light sensor thing.
Oh, we were just talking about that.
Yeah. So I was like, dang it. All right. But like I was just saying, we offer the power of choice. So with the market's best insurance companies at your fingertips, we can recommend the best coverage on the market and find you the best price for it. So by partnering only with insurance companies with records of success, we can quote the best coverage for your clients and with a company that they can trust as well. But like I said, we are 100% realtor and lender referral focused. So always looking to provide the absolute best client experience and just having the ability to work as a team as well. So unlike traditional insurance companies, we have multiple different products as opposed to one. And we also like to represent our clients rather than just one singular carrier. And then, yeah, just on a more realtor focused note, we're also able to run clue reports and pull claims that have been made on homes in the past 6 years, which can greatly affect clients and their ability with certain or eligibility with certain insurance companies. And so I've seen this firsthand. I'm sure most of you have as well. It's just really important to understand for our clients to understand the importance of prior claims when they're looking to purchase. And we also have the ability to run flood zone determinations as well. And we're able to write policies with both NFIP and private flood carriers. So if you or any of your clients are looking to shop around the market for insurance, I'd be more than happy to help and take a look, get a second set of eyes on there. And you can give your borrowers or buyers my contact information, or if you give me their information with a request for insurance, I'm able to call them, or you can scan my QR code or use my digital agent link, which I did send to Tony. So, but yeah, if you have any questions, feel free to reach out. I'm more than happy to help. And thanks again. And thanks, Tony, and thanks, Rich.
Thank you. Thank you, Gabby, again for the sandwiches. What a great resource. So an agent could call you if they want to see if the property's in the flood zone. They can call you if they're worried about some claims. Insurance costs for sure. I think we've all know that just on our own personal insurance has been going up. So certainly you're a great resource if somebody's getting a really high quote. That'd be a great place to go. So Gabby's information is in the chat. Thank you again, Gabby. We appreciate you. Want to go on to our featured speaker. And it's funny because Gabby and I talked about how to properly say her last name. And then I looked again at Pete's last name and I'm like, I'm going to take a stab at this. Pete's going to tell me how I'm doing on this. But we've got Pete Ficacine. Is that how you say that? Oh, no.
So Richard, we'll do this phonetically. Fick-I-Zen.
Fick-I-Zen. Okay. All right. That's Fick-I-Zen. Okay. That works. All right. So we're very blessed to have Pete here with CrossCountry. I mean, one of the greatest things about this company is just the amount of talent we have here. Peter's been in the mortgage business for over 20 years, funded over $1 billion in his own originations. And like me, he's in the production side and has been for a very, very long time, but now has stepped in to our company to start taking over what we call non-traditional or non-QM loans. These are going to be the loans that really fall outside of Fannie Mae, fall outside of Freddie Mac, outside of FHA. There's a lot of options for clients that don't fit into the perfect box. And why you guys are here is what Pete's going to teach you about. You guys can interact with us in the chat. Please put your questions in there. I'll kind of squeeze them into Peter's presentation. And now, without further ado, Peter, I'll turn it over to you.
Awesome. So what I'm going to do is, folks, I'm going to get a PowerPoint going here in a second. And just so you know, this is packed with information. We're not expecting you to memorize this. We're expecting you to call Richard and his team if you've got questions on it. Okay. So, I would say, Richard, let's get through like the first half of the slides, and we can ask some questions on them. Okay. Just so I can get through, and then we'll do questions again at the end. But as I load this up here, let's see, share screen. Okay, let's start this. Swap. Okay, So today we're going to talk, this is our partner class with you guys as real estate agents. So a little bit about me. I've been in the business for 21 years, originated a lot of loans. And, I think the most important thing you're going to take away today from myself and Richard is that CrossCountry has a lot of different options here. And in a market where rates are high and people are kind of undecided what to do, this is an opportunity for you to think outside the box and position yourself as an expert for self-employed borrowers when you hear somebody bring it up, borrowers that have a 1099, most likely like a lot of you, foreign nationals, people that are coming into the Chicago area, and maybe they've got kids that go to school there and they don't want their kids to go to dorm life and they want to buy them a condo. They think they have to pay cash, or people that think they have to pay cash because they don't qualify because of maybe a unique scenario with their credit, or maybe they have no job. And then how we can help investors and help you realize all the tools in the marketplace that are available to you to help people make informed decisions, that so you can go out and create more business for yourself. I guarantee you there's going to be a lot of kind of head scratchers here, and you're going to be kind of sitting there going, oh my gosh, I heard about this deal in the office the other day. Those are the answers that Rich and I are here to bring you. He's got a ton of experience. I have a ton of experience. There's really no dumb questions here. Ask anything you want. We might kid with you if we think it's really bad, but just kidding. We're here to really help you and help your clients get a place, right? And I think, as we go through it, I'm going to tell you kind of the ways that you can reach out. We as loan officers are already doing this, but when there's a collaborative effort with the real estate agent and the loan officer and even the insurance person, because Gabby's going to come across these instances too, where we're going to call her and say, hey, listen, this is a non-warrantable condo because they're not insuring it to Fannie and Freddie. What can you provide us as a possible gap to make it warrantable in our eyes, right? So we want you to think about all the instances where things might not be going the way you thought it was going to go with that ex-lender, and, go our direction. So why CrossCountry? Simply put, 1 in 44 mortgages in the United States in 2023, they're ours. We're one of the top retail lenders in the country. We have more in-house options, and we're the only large retail lender in the country that's doing these types of mortgages in-house. And when I mean in-house, I mean we're underwriting, we're funding it, and we're servicing it, okay? So really important. Not many people do this. I think the local comparative situation would be Guaranteed Rate for you guys. They've got a big footprint in that area. I mean, they don't have this in-house. They send it all out. They have a version, but it's like with training wheels. Ours is the full McCoy, okay? So when you're thinking about it, we think CrossCountry because we do have the options. Use Rich as a second look on any of these deals. Hey, they might be doing this, because the bottom line is when we're thinking non-QM, these are story-based loans. And every place that you try to tell the story, they might not get it because they don't do it. And right now with the marketplace, local banks aren't like, hey, I've got a couple $100,000 there. My business does business there. I'll just go to the local bank and get the loan. But maybe I didn't tell them that my credit's bad because of my divorce situation last year, and my spouse ran up credit cards, or didn't tell me they opened these credit cards, or there was undisclosed debt, or maybe I have a situation with a non-warrantable condo or unique property, or maybe I went from W-2 to 1099 and didn't tell my loan officer. Banks are reluctant to put any extra loans in their portfolio right now, simply put, because they overloaded back in during COVID with great loans at low rates. And when local banks go over $1 billion, their regulations change in a very big way, and they can't offload a portfolio loan. So when you think of non-QM, these are story-based, make sense loans for self-employed clients, wealthy clients with unique situations. real estate investors, fallout from other banks, and for foreign national clients that think they have to pay cash. So a lot of our programs don't require W-2s, tax returns, pay stubs. You know, we basically know that they're not going to fit in the box from the beginning, and we have a direct option in-house to do it. And, you know, folks, the growth on this product has been incredible. So we came as a group here to CCM with this product line a few years ago, but this group running this behind the scenes for CCM, we've originated $12 billion in this through multitude of companies over the last 6 years, okay? When I show you this next slide, and this is why you want to pay attention to this and market to these people, right? And I'm going to tell you where to market it, is because simply just the rocket ship is up. Whether it be young professionals between the age of 25 and 40, which is the core. We just saw a core slide, Rich and I, last week in our monthly meetup with our owner, Ron Lenhard, and he said the bulk of the people buying today are from 25 to 40. Okay, that's the bulk of the transactions. So when we look at the bulk there, when we look at certain categories like investment, I think of the meme, you know, stock movement with Robinhood. I think of, you know, all these people that dumped money in over COVID and tried to be day traders, that now they're just sitting in cash positions because the market's gone up and down and there's so much uncertainty with the inflation. So people are looking for alternative ways to go out there and do it. And good for us, mortgage applications are down. How about an investment property, right? Get your investors lined up, right? But we're the #1 retail mortgage company in America doing these products, okay? Most lenders are brokers, like I covered. But the greatest thing about us telling these story-based loans, trying to figure out, you know, get to the bottom of why it doesn't meet a traditional loan, is that we fund every single month about 35% of our closed volume is on exceptions. And we're very quick. So when Rich calls and he needs an exception from my team, we're processing that same day. If it's a loan amount over $3 million, it might take a few extra days because we have to do a little due diligence on our side. But reality is there's no like, hey, I'm waiting for the answer. How many times of a real estate agent have you heard that? I'm waiting for that answer to come in. Oh, I just need another day for that commitment extension. I just need this. I just need that. We're making the decisions quick for our loan officers today. And that gives you the power to go out there and get these referrals and refer with confidence to Rich, because we want you to understand that we know how to do these loans. Okay.
You know, and one thing about that, Peter, you know, what that us doing 33% of these loans with exceptions means to our clients and our realtor partners is that, you know, these guidelines aren't rigid. We realize everybody's situation is individual, and there may be stronger compensating factors that would allow us to make an exception. So that's the beauty of being able to do this program here in-house, because we can do that. So great point.
Yeah, so there's not many lenders or loan officers in America that could say like, hey, things are going great. Well, across country, we're doing pretty well. And if you look at the way this product has grown, it's grown 400% since last December. There is not one lender in America saying that. In August, which is routinely a dead month, right? And we're going to break it again. We broke it again in September, and we're going to break it again in October. You know, our locks right now are approaching 200 to 250 million a month. Okay. This product is hot, right? I would say the two hottest products we're going to go over are investor loans through our debt service ratio coverage, or DSCR. And then we also have our bank statement loans, which is using 12 or 24 months bank statements. So the growth is big, and this is why you want to pay attention. And we're out here teaching you this, okay? So we have options. So we have a bank statement loan, an asset qualifier loan, which is an asset-based loan, an investor cash flow loan, which is our DSCR. We have our full doc, or what we call our fallout loan. loans that are basically falling out at local banks that need to go portfolio. We have our 1099 only, and we have our foreign national products. Now, within that full doc too, if you guys are have clients that are under the ITIN and DACA agreement that the U.S. has signed, we have ITIN and DACA loans as well. Okay, we also do mixed use up to 4 units. So, again, you can see some of the highlights that we have here. I'd say one of the greatest highlights that we do have, and I don't put it on here for a reason, is that we can close in every single loan an LLC, a corporation, or a trust. Okay? LLC, corporation, or trust with no extra cost. They just have to turn in all the documents. Okay? So being able to close in an LLC in almost any type of loan product is huge. Okay? Fannie, Freddie, jumbo stuff, can't do that. Can't close in an LLC. So let's get into it. So first loan product we're going to talk about is our asset qualifier program. So it's really simple. And I'm going to give you examples for all this so you understand it. But this is where, if you know financial planners in or around your sphere of influence, you want to be talking to Rich, and we're going to talk about this at the end, about becoming a partner. And when we're a partner, basically with our marketing department, you can sign up for a partner and we can dual market anyone with you, right? So basically, we send information to a financial planner. It's got your name, our name on there, right? And we're providing you the assets and or materials to do that. The great thing is too, every loan that we closed for the rest of the life of the loan, you're tagged in that deal. And as we say, happy birthday or happy loan anniversary, or, would you like a home equity line, or any of the marketing that we do, you're on it. And I'd say one of the greatest things that you guys have here today is I worked at a real estate company as their in-house mortgage provider for 10 years. The one thing I noticed was, and the one thing that NAR has come out and said, is that less than 25% of real estate agents remarket their past clients. We're doing that for you. And I know Rich is committed to sending every deal that comes to him through you back to you. So really important that you understand what we can do here with all these different referral partner types. So a financial planner. You go out and you say, hey, listen, I just did this training with CrossCountry Mortgage with Richard Kimball, and basically I learned all about the fact that we really shouldn't be allowing borrowers to take all their money from you and buying houses cash. Folks, you can use those cash letters to put homes under agreement and then take a mortgage. We can also use this program as a technical refinance as well, where as long as we show that they paid that money at closing cash, we can refinance and put the cash back in the bank for them. So the way that we do this is really simple. We're going to look at the last 6 months of bank statements to verify that their most recent statement actually has the amount of money we're looking for. Okay? We're looking for checking, savings, investments, 401ks, IRAs, crypto that's been liquidated in their Coinbase account. Whatever that they have that's an actual tangible asset. Someone sent me bonds the other day. That's the same thing as cash. We'll use all of that, right? From a business owner, they can use their assets too of the business. They have to be a 51% owner or more, have to have access to those funds. But we don't actually ask them to liquidate anything but their down payment. What we want to verify is very simple, that they have 125% of their mortgage debt post-closing in the bank. We'll take certain percentages of all those different asset types. So I'm going to represent 70% in my example to you. I had a financial planner call me, said, Pete, I got a borrower that's got a house in Lake Tahoe. He wants to buy a second home in Newport, Rhode Island on the ocean. It's where he grew up. I said, phenomenal. What can I do for you? Well, he wants to withdraw $1 million of his $4 million in the bank and wants to buy this place. I said, okay, what's the problem? He goes, well, I don't want him to withdraw 25% of his life savings because he's got no job for this deal. What can you do? And I said, well, that program I told you about, he's definitely, how much do you want him to take out? Well, he's going to borrow probably about $500,000, put 50% down. I said, okay. Said, well, how much does he have for mortgage debt in Lake Tahoe? $500,000. So I take the $500,000 debt there in California, take the $500,000 that's now going to be in Rhode Island. It's $1 million in debt. 125% would be, I need to verify they have 1.250 in the bank. We're going to take 500 grand from that 4 million. So now I got 3.5. 70% of 3.5 is way over 1.25 million. We're done. Said, Mr. Financial Planner, send me those bank statements. Give me 6 months plus their most recent. I'm going to need a statement to show that they've withdrawn the funds for the down payment. We're good to go. Close in 2.5 weeks. No job. This is a no ratio product. I'm not looking at anything on their credit report except for their score. I'm making sure that they have some trade lines, of course, but I'm not verifying any homes other than the mortgages that they own. I'm not really verifying much at all other than assets. No 1099s, W-2s, pay stubs, tax returns, nothing in the file. There's no job or income in there. We've derived through
That's
one of our
incredible,
methods
Steve.
that we can do this deal.
Yeah,
Okay.
that's incredible. So if they have the assets, we're not looking at income. I mean,
Correct.
it's essentially the program. So that's a really awesome program. So
Yeah.
especially for our agents that have financial planner relationships. So that's a great one.
Yeah. And by the way, you should be talking about this as you hear things in the office. But high net worth clients, businesses that are recently sold, retirees, recent job change, second home areas. So stuff on the lakes all throughout where you guys are from. Upper Peninsula, up in Michigan, where everyone's going, Madison, Wisconsin, wherever you guys are going for your second homes. CPA referrals too, letting them know about the program is huge. And again, clients that don't have a job or went W-2 to 1099. So think about it. No job, no income, no assets, or have assets. We're winning a lot of deals for people that think they need to pay cash, plain and simple. So that's the first program. The other one that we talk about with financial planners and CPAs specifically, or anyone that processes taxes, is our bank statement program. So as a loan officer, as a realtor, you've heard loan officers say, oh, we looked at their tax returns and there's nothing we can do. Well, if they've been in business for at least 2 years, I need the last 12 months of their bank statements, and I'm going to take their gross deposits divided by their ownership. And then I've got 4 different methods I can qualify off their business bank statements, or if they use personal bank statements for their business, that as well. You don't verify the deposits. We use an income calculator worksheet that basically we can get done really quickly. They can own multiple businesses. We're just going to use the business that's, got the best deposits. I don't care about the negatives of the other one. Again, there's no tax returns with these files. But as a loan officer, we know once we start talking to somebody, like the bulbs going off, sirens, the red sirens going off, we've got a problem. Pete's Pizza made $1 million last year. And they wrote off $999,999. That's a big problem. They made $1. And we can't depreciate the dough or the boxes or anything. We depreciated the oven that they put in for their pizza oven 6 years ago. So what do? We take the 12-month bank statement. We take their gross deposits. We make sure there's no albatross deposits like the pizza place did $1,000 a day or $30,000 a month. If one day they did $8 grand, we need an explanation. We need to see what those deposits are. But it's a really simple way for us to qualify people. It's the hottest loan product in the marketplace. Simply put, the tax deadline was last Monday, not yesterday, but the week before. And everybody's now finding out that, oh, I filed my tax return and I'm in the process of buying a home and I'm self-employed. And the last 3 months, people have been doing that too. So this is really important time that people understand that we have an alternative if you have an issue, right? Very, very important. So a CPA you work with. Of course you work with a CPA. You're probably self-employed, right? You've got someone you can call right away and say, hey, you're trained on this program. If you ever have anybody looking to buy a house that can't qualify, I know enough to be dangerous and I can refer them to someone And I'd love any of your referrals to help me help them get a home. I do the real estate, but I know enough to be dangerous on the mortgage. My friend Richard at CrossCountry can do these deals. You should meet him. It's gonna lead to referrals. 100%. By the way, we go to 90% loan to value on this with no PMI. Okay. Loan amounts can be, we'll actually go down to about 75K if we need to for people. Try not to, because we run into, cost rule sometimes that we want to avoid. But anyways, a great route. So you want to pitch the financial advisor, you got this, CPAs, self-employed borrowers. If you're in the local chamber of commerce, you should be bringing this up. It's crazy hyper local marketing on this. Find your local people, let them know. Okay. But so many people get turned down by tax returns. So many loan officers, by the way, just to give you a heads up, been doing this a long time. So many loan officers don't know how to do tax returns. Here at CrossCountry, we actually have software that within minutes we can do tax return reading. So if you're waiting days to figure out a pre-approval, that's really not cool in this marketplace. It should be hours, right, Richard? Hours.
Absolutely.
I mean, we get the tax returns, we feed them in the system. It doesn't work. We get rid of those, and we can do one of these types of loans.
Yep.
Okay. So really, really great way to qualify people. Again, being self-employed, folks that aren't getting approved, plain and simple. Okay, last part for you guys, specifically 1099 only program. We will use, if you've been a real estate agent for 2 years, we will use either 1 or 2 years of your 1099 and average them, okay? Or I'll use 1 year. So last year I had a great year. I made $100,000, let's say, okay? I'm going to use 90%. That's it. I'm telling you, a lot of you write off a lot more than 10% of expenses, okay? So if you made 500,000, right, we're going to use 90% of that. So we're going to use 450 grand to qualify. Okay. No other documents needed except 4 months of bank statements, recent bank statements, for me to show that you've actually been making these deposits. You've been still in the line of work as being a realtor. If the last 4 months have been slow, you can go to your admin and say, hey, listen, I need you to do a printout of my current listings. I need you to do a printout of my my current year-to-date 1099 earnings, and hand that over. We'll take a look at it. Things are easily explained, right? We're in the middle of February. The last 4 months might not have been great because it's the middle of winter. You might do your biggest slug of business in the summer or the spring or the fall. We just write a letter of explanation, hand it in. We make sense of it, okay? But it's a really great program for folks that have multiple 1099s or just one. Now, say I'm a realtor and I made 200 grand, but I also have a W-2 gig as a marketing admin or something, and I make 60 grand W-2. I'll take that W-2 income too and put it in. You just can't have other income, passive income, that's going to be more than the main job of the 1099, okay? So you can't be W-2 and then ask me to use, can't use 200,000 of W-2 and then use 100 grand of 1099. That doesn't work. But if it's the opposite, if it's the predominant job, we're going to use it, okay? Super, super easy. And then for full doc, bank statement, and CPA or 1099 loans, the primary wage earner credit score is the only one we use to qualify the loan. So if you've got a husband and wife, or two partners that are doing it, whoever's the primary wage earner, whoever earns more, will use their FICO. So you have to add somebody on just to qualify, and their credit score is not great, but the primary wage earner is 750. Say the co-borrower is only like, 680. We'll be able to qualify on that higher credit score and use both incomes. Huge deal. Okay. Means a lot to interest rate, folks. Credit score is a big piece. Again, we do all these products up to 90%. So no PMI there, closing an LLC. So realtors, tech workers, CPAs, financial advisors, anyone that can give you a referral from this, you want to find them out, right? You're going to hear other realtors say, oh, I don't qualify for a loan, this. No problem. Let us run your numbers. Give us your 1099. We don't care about your tax returns. But dig in, find these people, right? Musicians, huge. I one time, Rich, did a wedding singer, 32 1099s. It was awesome.
That's hilarious.
32 1099s. He was a musician.
That's right.
Pretty
Was
good
he
wedding
singing-
singer, I guess, for 32 gigs.
Was he singing to you
So-
once you approved him, Peter?
He what?
Was he singing to you once you approved him?
He was very happy. Very,
There
very
you go.
happy.
That's
So,
awesome. Yeah, I think here in Chicago, aside from realtors, of course, we do get a lot of independent contractors. You get a lot of, especially you get some tech folks here, some independent contractors. We do have a little bit of a arts and entertainment area where they're going to get some 1099s as well. There for downtown, there's a little studio that does some TV shows and things here. So
yeah,
interesting enough for sure.
sounds good. So I'll do this one and then we'll do some questions. So investor loans. So folks, we talked about that demographic of 25 to 40-year-olds using money. There is, you want to write this down, there is a movement out there called Bigger Pockets. Bigger Pockets is a podcast where investors from the age of 25, I've seen people as old as me or older out there buying investment properties, refinancing investment properties. Okay. I'm going to tell you one of the greatest loans I ever wrote with this product, but it's really simple. We only require 20% down. We're not using tax returns. We're not using pay stubs. We're not using W-2s, 1099s, business returns, or nothing. We are currently only looking at what the rent is or it's going to be for this property, whether it's a full monthly rental with an annual lease, a month-to-month rental, or, get ready for this, a short-term rental. I'm going to tell you here today how you can go out and find these people and put an extra 5 deals in your year. Investment properties right now are a hot topic. Simply put, mortgage applications are very low. Okay, there's a chance for investors to get in, especially with higher interest rates right now. So you've got people taking hard money that are doing, instead of buy and flip or fix and flip, what they're doing is they're fixing and they want to hold it. When they fix and they want to hold it, they don't want to be in that 12% hard money rate. They want to be in a lower rate. Our rates today are in the mid-8s for this. Our rates for investment loans and second homes, folks, are lower than Fannie Freddie's rates today, okay, with easier documentation. So you need to find these people. They're out there. So Bigger Pockets has local. You want to get hyper local. You can hear me say that a bunch, because in your neck of the woods, did you know that there were groups meeting talking about how do we get properties here, 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 and here? And being in the Midwest, just below you, you've got, and to the right and left of you, you got Cleveland, Missouri, or Ohio. You've got all these other great areas that, by the way, as a realtor, even if you don't do the deal locally, bring it up to everyone you know. Getting a 25% referral fee is no joke for doing no work, but refer them over to Richard. Richard has the ability to navigate basically a process for a lot of states out there, right? So if you've got someone that's buying a place anywhere, give Richard a call. He'll figure out how to get it done. We have a great referral highway. We're licensed in all 50 states, okay? So it's really, really important that you understand what this loan product is. So how do we qualify the client? We take the rental income divided by the payment on that place. Principal, interest, taxes, insurance, and then any association dues. So if it's a PUD or a condo, that equals your debt service ratio, debt service coverage ratio. Okay. DSCR, you're going to hear a lot about it. That is an acronym you're going to want to know. So let's talk about it. So Rich wants to go buy a 3-family in downtown Chicago. I'm the realtor. I show it to Rich. Rich, we're gonna have this property delivered vacant. I did the research. I went on Zillow. I went on MLS. I found that places, you know, in this part of Chicago are Wrigleyville, one of my favorite areas. Places in Wrigleyville, they're renting for about $4,000 a floor. Okay, $4,000 a floor times 3 floors, it's 12 grand. So we can go up to 80% on that purchase. We got to make sure that payment is at least 75%. Excuse me, the rent is at least 75% of what that payment is. Okay, so it's really important to know we don't have to be equal at 100% 1-to-1. We're not using a 75% expense factor. We're using 100% of the rent to qualify people. Okay. No other income's used for this product. None. You don't need it. So if you've got a good credit score, you've got down payment, you've got 6 months reserves, let's say the loan amount's under $1 million, you're good to go at 20% down. As long as the rent is at least 75% of that payment. So if my payment's $1,000, my rent's got to be $750. Really simple. A lot of the rents are greater than the payments these days, though. And one great feature is we can qualify interest only, which is really important. Okay. Credit score is in play, but it's a no ratio program. We figure out the income. We don't care about their past jobs, anything. There's no income entered into the file. So for short-term rentals, I got a client that comes into the city for work for 3 days a month, but he wants to buy a condo. It's going to be an investment property for the majority of the time. Okay, sounds good. So short-term rental. We do condo hotels. Okay. So condos that have hotel-like features, we do those. We do non-warrantable condos with this product. Okay.
Hey Peter,
Simple.
give somebody an example of what a non-warrantable condo is. We throw that out like everybody in the room
Okay.
knows what
So a non-warrantable condo, say the budget doesn't have 10% reserves. Say that somebody got bit by a dog, or there's litigation going on with the condo association. Say that the minutes represented, you know, that some decks were falling down, but we have proof that the HOA repaired those decks, and yet the condo association still is acknowledging that they still need to be painted, right? Anything that Fannie and Freddie won't do, we'll take a look at. Our only kind of hell no with that is that if there's something wrong with the building that's going to, you know, affect the integrity of the building. Like I had one in Boston, Massachusetts, where all the steel girders were all rusted in the basement, and they needed to be like replaced. That's a big problem.
Yeah,
right.
To say the least. Yeah.
Right. So information like that's important for non-warrantable condos. But folks, like the greatest deal I ever did with this product, probably my greatest non-QM deal, and the realtor, she just called me actually yesterday. Okay, realtor called me in Boston, says, I have a borrower. I need to figure out how to do this deal. He's got $1 million cash, wants to buy this multifamily. He is a retired janitor for the Boston school system. I said, okay, sounds good. What's the story? Well, he can't even afford the extra $200,000 plus his current house and this and that. I've been to 3 other lenders. Oh, okay. So why are we putting all the money down on one property? I turned that $1 million into $4.9 million worth of real estate, 5 deals. Do you think the commission was a little bit higher for the realtor turning that $1 million into all that cash for them?
5x.
That borrower is now cash flowing after all expenses, 22 grand a month in profit.
That's awesome. That's great.
You can't really turn $1 million into 22 grand a month anywhere. And he's aggressively paying down all of his properties. Okay.
Nice.
So 200,000, 5 deals. We did some closing cost credits with some of these properties. I mean, it was just a beautiful story. Let's just say the realtor was pretty happy. Okay. She thought she was getting $1 million or $1.2 million purchase. We turned it into a little less than a $5 million total acquisition. So, you know, these are the types of things that
and a 26% return, Peter, on that $1 million.
It's pretty good.
Pretty damn good. Great job.
Yeah. So those are the success stories that we have that are true with these products. The key for you is, and this is what we're going to go into, is that number one, you got to find these buyers. If you know people doing hard money, if you know people that are, you know, in investor groups, if you know experienced investors, bring it up to them. You know, one of the greatest things today about these higher interest rates is that our rates are lower than equity lines. Our rates are much lower than investment equity lines. So you can have your people that own buildings free and clear that want to do something else in real estate, do a cash out refi and use that money to put down on new homes. Rich loves those. Now for short-term rentals, there is a product out there called AirDNA, not Airbnb, but AirDNA is a software company that will give you as a realtor the information on if my client wanted to buy an investment property, what the rental would be on that. How much money could I make on that property? If you're doing a monthly rental, you can use rentometer.com. Gives you a really good idea of what a conservative number would be on a monthly rent. MLS, let's face it, doesn't have all the rental information in there. Going out to find current leases, calling other listing agents that listed rentals that didn't put it in MLS as a follow-up, calling rental companies. These are great places to start. And again, with your power of being able to refer out of state too, in states you're not licensed in, you can make a free 25% on these deals by just bringing it up. But you want to go out and you want to really find investors' properties right now, right? Because if you go to these meetups, all these people are looking for is properties. You could bring Rich, you could do a DSCR presentation there. But these are great ways just to, you know, in a great market that's untapped, a lot of these people think they're realtors, these investors. They think they know your job better than you do, right? They try to pirate their way into MLS, try to get the lowdown, try to circumvent paying, you know, real estate fees. If you are the person bringing the value to them with these ideas, get them in a buyer's contract or whatever your real estate laws do, and basically try to get in when you can, okay? Get this information in front of them. I go to local meetups all the time.
And we've got flyers for sure that we can joint market with you guys that go ahead and solicit these programs. Peter, can we get into some questions here?
Mm-hmm.
All right, perfect. So we've got some really good questions lined up, and I want to kind of talk about a couple things you touched on. So Mary Glenn asked, can we close in an S corp?
You can close in a corporation, yes. There's a there's going to be a whole checklist, Richard, of, you know, all the documents you need to close in a corporation. So what I would do is get all of that information in there, make sure, you know, send the checklist out to whomever's asking and make sure that it will qualify that route. But yes.
Okay, perfect. And Jessica asks, do we do refinances for businesses? So I'm not sure if she's talking about a business owning a piece of real estate. I think if you're just talking about the business itself and no real estate is involved, that is not something that we would do. But
Correct.
If a business owns real estate, we're definitely going to do that refinance. If you want to expand on that, Jessica, feel free to hit us back up with that. Claudia had asked when we were on the asset qualifier, what kind of rates we'd be looking at on that one.
So rates are going to be dependent on credit score, loan to value. You know, with the loans that we write, I would say our investment loans are very aggressive, like almost better than Fannie, Freddie, and Jumbo. Same thing for second homes. like I did that. I did a quote for someone a couple weeks ago. The loan officer in my office gave me a quote today. It was like 8.25, 8.5 with a point. That was one deal. I'd say we're pretty darn aggressive, but it really depends on the loan to value, the credit score, and just like any normal loan, just the circumstances that are there. So, I know I'm not kind of beating around the bush, but I'd say rates for our products go between the high sevens and high nines, depending on your product. Like if you did a 90% no PMI deal with a great credit score, you're probably looking at like a 9.5% rate. But if you back out what that PMI cost would be for you today, it actually averages out to be pretty close to Fannie Freddie.
Yeah, that makes a lot of sense actually. So, all right. So we've got Alexandria asks, do we refinance rental DSCR properties that are in a short sale? So it sounds like our client, typically if you're in a short sale, I know a few short sale negotiators, the only way you can get the bank to actually agree to the short sale is not to pay the mortgage. And I don't think I have to ask Pete this one, but if you're not paying your mortgage, it's probably not something we can refinance.
It depends how many lates. I mean, we do have a lot of very lenient credit guidelines, but it really depends what the circumstances are of the short sale, right? I had a woman whose husband passed away, and she was actually sick, and we could show that she missed 3 payments during the period. Then she caught up, made all the payments, but it still went into a short sale. And she's working on getting out of it. And we're trying to refinance her out of that right now. So I'd say every circumstance is going to be clear. It's just that if you're in a short sale or a foreclosure, our time periods are sped up a little bit. We're going to cover that in this full doc analysis. But again, if it makes sense, if someone just like didn't make payments and they have a history of other late credit, there's a problem.
Yeah. Yanetta asks, what is the down payment for bank statement / 1099? I believe you mentioned it's as little as 10% down, Peter.
Correct. We'll go to 90% on those.
Perfect. Okay. Is there a limit of how many by the way, great question. Is there a limit of how many DSCR programs that we would, or loans that we would do to a specific corporation, LLC, or individual?
So that's a great question. So right now, our limit that we'll hold here is 15, but I could tell you we've done as many as 30 with one client.
There you go. That's a great question, Myra. Great question. All right. Let's see here. Want to make sure. All right, Jessica, I don't know if this is quite the question, but I'll go ahead and read it here, and I'll let Peter comment. I got a couple other things here, but I have a property that I have rehab. Now I need to refinance so that I can rent it out. I want to put the refi in my business name. Also, I have one that's in my business name that I will need to refi so I can keep it as a rental. I guess that's more of a statement. I would think that both of those, okay, she's working on elaborating on that one. So bear with me, Peter. One thing I will share with you guys while she's doing that, I did look up, we talked about these Illinois real estate investment clubs. These are really great places for agents to be, to rub shoulders with investors, let them know that, of product that is out there. When the market slows down, typically one of the things that does not slow down is the investors. They're still out there buying and doing different things. I'm going to actually drop into the chat. See if I can paste this in here. There we go. I'm going to drop into the chat. This is, if I can hit send. There we go. This is a website out there that has Illinois real estate investment clubs, and there's 8 of them here. You get 8 different choices on that website of different clubs that are either in your area, maybe fit your schedule of when you could make it. These are the places you want to go and talk about these types of programs. If you need us to go with you, if you need a flyer from us, we can co-brand. We would be more than happy to do that. And then, okay, Jessica did clarify, do we refinance for businesses? So I believe the question is on those properties that she has, one which is a rental and the other one which she has rehabbed, we will refinance those. We will refinance those if they're in the business's name. So we're refinancing real estate in the business's name. That is definitely something that we will do. And last but not least, by the way, that Rentometer site, Peter, that was awesome. I actually ran my own property through there just to see what the how easy it was to work with, and it gave me a rental rate, and I think that's probably the right rental rate based on my neighborhood and everything. So that was a very cool site. I appreciate that.
Yeah, no worries. So, folks, I'm going to rip through this stuff here for you so you got a great understanding. So the full doc program, okay, you're walking around the office, you hear about a deal blowing up. The loan officer didn't do this, loan officer did that. You got the bad news last minute. Call Rich. Call Rich. Okay. That max LTV is changing to 90. That's noticed in the highlights. I got to change that. But we'll do 90% or 10% down. Pretty simply put, it falls out like, folks, just so you know, for Fannie and Freddie, we run automated underwriting. Someone makes a late payment, someone does something. Sometimes that automated underwriting doesn't work. Okay. And when we get a refer, we hit the button that's blank, 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 right? And how are we going to fix this? So when we have to hit that button, we look to non-QM. We look to the full doc program, priced really well. We also have a platinum non-QM as well, which pricing is super sharp. But credit events, foreclosure, bankruptcy, short sale, folks, sometimes those don't get recorded. I had somebody that got foreclosed on, moved out of the house 8 years ago. It just actually, the bank actually just sold it to somebody, and it just changed hands like a month and a half ago. We'll do that deal. Show us the original docs, even though it just got recorded. We'll do the deal. Okay. Give us the story. Debt to income ratio over the limit. Oh, I just did the new calcs. You didn't get that bonus. Loan officers right now are in operation desperate mode. They're taking pre-approvals. They're issuing pre-approvals for people that might not qualify. In the Midwest, you guys have a lot with Quicken. Okay. I'd love to say these online banks know what they're doing in Rocket. Problem is, I can feed them any information I want. There's no check on it until I give them the docs. But they're giving me pre-quals and pre-approvals that don't mean squat on them. So when there's a problem, like jumbo loans, you can only have a ratio, debt to income ratio of 43%. We go to 55. I've even gone to 60 on a few. So debt to income ratio over the limit, non-mortgable condos or unique properties. Okay. Log homes. You got a second home somewhere, got a home with a ton of acreage, equestrian use. Send it over. We'll take a look at it. Out of the box income calculations. We do W-2 to 1099. Oh, I was, or W-2 to K-1. I was a attorney in December, but as of January, I became a partner. Well, you just became self-employed, need 2 years tax returns. Not with us, we can do that. Oh, I was W-2, but I realized it'd be better for me to pay my own health insurance and my own deal with the amount of money I make rather than get W-2'd. My company let me be 1099. We can do that as well. Okay. So you don't always need 2 years tax returns to qualify if you're self-employed. We can use passive asset utilization. We use this a lot with retirees. If I can't go the asset qualifier way, I'll see, okay, they're retired, they're of retirement age, they have $1 million. I'm going to divide it by, there's a couple different scenarios depending on their age, but 84 months. Next thing you know, I've made 10 grand a month in income. We'll do that stuff too. So divorce situations, we have a lot of unique ways to approve people there too. Just so you know, generally you need 6 months alimony or child support to qualify. We've done less. Okay. We have done less. So if there's an issue going on, either between you, a coworker, in your office, send it over. Let us take a stab. We're really quick to get there, but Any deal that got denied, think about anything that's going on, or you guys get these, if not monthly, bi-weekly. You definitely get them quarterly. So there are deals out there to be had where your clients think they can't do it. Okay. And again, rates are not like insanely higher. Okay. On average, I'd say anywhere from a half a point higher than the normal rates. Okay. Max LTV, low credit score might be a little bit higher.
Yeah, and that's and Peter, we always talk about the fact that okay, you're going to pay a 0.5% higher in interest rate, but if your accountant was not allowed to do the great job that they do on your tax returns, and you'd actually have to show the amount of money in your tax returns to qualify for this loan to get a conventional loan offering and save the 0.5%, you likely would pay at least 3 or 4 times minimum in taxes to the IRS and to the state of Illinois to show all the income you'd need if we just go, unless we go bank statements or 1099. So the moral of the story is you'll pay a lot less in a little bit extra interest than you would back to the federal government in the state of Illinois.
Yep.
So you ready for another question, Pete? Are you still
let me just get through this here. So the foreign national
no
program. Okay, so the foreign national program is pretty simple. Someone that doesn't live or work here. Okay. We'll also do a foreign national that just moved here, that doesn't have a credit score, but has a job, and we can verify income going forward. But with foreign nationals, I'm not verifying anything that they have overseas. I really don't care. What I'm verifying is we're going to qualify them on our no ratio program, either via assets that we reviewed or doing a DSCR loan. They can do this as an investment property with DSCR, or can do a second home through our asset qualifier program. Again, no income needed. So when you have that foreign national looking to buy a condo or something in downtown Chicago, don't let them pay cash. Use the cash feature to get the deal accepted and then take a mortgage. Okay? Maybe they love Chicago and want to buy another property, but they just spent the whole load on money. Or people that already bought that thought they had to pay cash. Now you can invite them to get cash out and buy another property. Okay? We're going to verify foreign assets. The client has to be in the United States some way, somehow, and also has to have a visa, the ability to come here. Okay? So if your client's like, oh, I'm going to be in, X country during the closing, they have to go to a U.S. embassy to close. No, it sounds crazy, but we need someone associated on the loan to be at the closing. Okay. But yeah, I mean, where you guys are located, I mean, colleges, second home areas, metropolitan areas like Chicago, Detroit, but these are U.S., non-U.S. citizens, again, that's looking to invest or have a second home here. We get a lot in these destination areas, but think about, again, clients that paid cash that could take cash out and buy more properties. So we kind of always go to. So just like a portfolio bank, we make a ton of exceptions. Here's just something that you can kind of take a look at. Okay. You can understand kind of here are some of the things that we, give exceptions to that other people won't. Okay. So let's talk about those questions before I get in these last two quick items.
Yeah, for sure. Jessica asked, are we able to determine which program is the best fit for us? Example, they apply for one program, but we look at it and we decide they're better fitted for another. Can you tell us which one to apply for better suited before applying? I'm going to let you answer that. I know how I would answer that, but I'll let you add that one.
Yeah, I mean, I think when you refer that client over, Jessica, what we're going to be doing is we gather all the info. So the important thing is, if you guys are trying to be the middle person with this, it's better just to know that Rich isn't going to hard sell anybody on anything. He's going to be there as a resource of information for you and your clients. Whether we get the deal or not, we're not crying over spilled milk here. What we want to do is we want to make you look great. We want to close a deal for you. We want you to get paid. And of course, we want to get paid. But at the end of the day, your referral counts, right? So understanding that's half the battle. So it's really important for us to talk to them and qualify, because when we want to qualify for a mortgage, I want all the assets. You don't understand how many times I'll go back, or Rich will go back to a client and be like, is there any other assets that you didn't bring up? Oh, well, I don't want to touch that money. It's like, okay, that's what we're getting to. We know you don't want to touch the money. We're not asking you to. I just might be able to use that money to leverage something else. There's no lien on it. There's no use of it. I just need it as it's there if I needed it at some point, right? So like trusts, extra 401ks, extra IRAs, bonds, just like all these, people are like, I just don't want to count that. But it's just like, in order to get your deal done, we want to count everything, right?
Yeah.
So we go through that with the client to make them understand. But yeah, sometimes I'll be halfway down the road with somebody in a bank statement loan and looking at their 12 months going, oh man, these people have like this guy's 100% owner. He's got 4 million in his business account and he's a plumber, or he's, not like, he doesn't need to use the money in the account to like pay out crazy business expenses or anything, right? So sometimes we'll be like, hey, there's a much easier way I could do this. I can do this asset qualifier. And I'll ask them the questions and we'll pivot. But we usually do that up front in the qualification period.
Peter, we got one more question before we go on to the affinity lending program. Becky asks, so for a non-U.S. citizen, basically, do they need an ITIN to qualify? Is that a crazy question? But she followed it up with, she means people that don't have a social security number. I think that's not going to qualify for our stupid question that we started this off with.
No, it's not a dumb question, but people that don't have a credit score, we'd have to, first figure out what that is. So if they have an I-10 or DACA status, we can do those loans. If they just moved here or they had credit in the past. So like I can do a loan with someone with no credit score, but they can show in the past they had a great credit history. Like I looked at one today, there was no credit score, but if you look down, they had debt the last 10 years. They just paid it all off. They said nothing in the most recent 6 months. So there's multiple ways we're going to kind of discern and look at that. But again, Rich can run we can do a soft credit pull on any loan, by the way, folks. So people that are like, oh, I don't want my credit run again. Well, we don't need, trust me, as a branch manager being Rich, we don't have to pay for soft credit pulls. So we want to run as many of those as possible to understand if a client's going to qualify up front and there's no hit on their credit. So always recommend that. All right. So a couple other things, just want to keep you up. So we're done with the non-QM part, but CrossCountry, we have a crazy affinity lending program that we can do, ultra local with Rich's group, with 25 or more employees. So would like you to just kind of bend your mind a little bit and think about, do I know a company that we could offer a real estate mortgage and possibly through Gooseneck, a insurance benefit program? The more money that we can help people save that work for that company, the better. This is on a grassroots level when it's less than 250 people in the company. If it's a giant company, like you say, oh, my wife or my husband runs Adidas or runs Coca-Cola or something like that, or my uncle does. Yeah, you want that in and you want us to be there, because we have people that will hop on a plane and they will actually fly there and make a presentation with Rich and you and make you all look great with all the other, blue chip companies that we have that we're already representing. But, a benefit affinity program kind of looks what I put on the screen. We want to be that local pro for all the businesses, right? But basically what it is if it's less than 250 people, we're building the benefit with you. So, for instance, real estate agents that my team works with, they'll give back $250 up to $250,000, $500 up to $500,000, and $1,000 up to $1 million, and over $1 million, purchase amount. They'll basically tell them what they'll write a check for. Okay, but we're talking bulk business, right? We're going to go in there 4 times a year, once a quarter, and present about real estate, mortgage, insurance, whatever the employer wants to know. So we're going to give free educational seminars. And then if the client decides to buy a house and they decide to use us, we give them a discount. We name the discount before they close. That's it. But doing one-on-one days, getting in there with the employer, doing these over Zoom like we're doing today, it's too easy not to put out there just to try to get a couple extra deals. So put this in your business plan for next year. Talk to Rich about it. And then lastly, buy now, sell later. So this is part of our non-QM program. And the reason why I bring this up is so many people are trying to buy homes. And they don't want a home sale contingency. So Rich has the ability to offer a pre-approval without a home sale contingency if the client will qualify for buy now, sell later, which is, I really want to buy that house down the road, but my kids are still in school and I don't want to sell in the next 90 days, right? I don't want to sell right now. I need to keep my kids here. I don't want to go nuts, or I want to time the marketing of my house, or maybe I need a little work I need to do at my house. So buy now, sell later means I can't qualify to carry both payments, my current house and new house, but I do have 20% down to put down on the new home. And I can use that by the way, buy a gift for my parents or a family member. And I definitely have 20% equity in my current house. Okay. So what we're doing is that departing residence, the house you're gonna sell at some point, we're not counting the payment that you owe on that. Whether it's a first mortgage, second mortgage, whatever you got for a payment on that, taxes, insurance, association dues, we're putting that to a side. We're only qualifying you on the new debt of the new home. So it allows us with houses either currently listed or going to be listed. It allows us to be able to qualify the client to get into the new home without counting the old debt. By the way, we also have the CrossCountry, equity line, which is a fixed rate equity line that we can actually get approved within an hour. I think it's actually instantaneously.
Yeah, it's
and
almost instantaneous. So
Yeah,
I mean,
and you can
I
close-
was going to mention that. I'm
Yeah,
glad you brought
Equity
it up.
Express. So I've had numerous clients do buy now, sell later. Like, well, I don't have all the money. I don't have the other reserves. Okay, well, you've got 800 grand in equity. You only owe 200 grand. It's $1 million house. Why don't you pull 300,000 out, put it down, you'll have the reserves, everything. Then you're going to sell the house. You're going to list it right before we close anyways. You're going to close the next 60 to 90 days. We'll be good. So we have ways to go out there and market and help you market yourselves with programs that other people don't have. Okay. So just be cognizant of this, that we can definitely do this and help you get under agreement on that property before they sell their old one. Okay.
Becky asked, what's the FICO score for our Equity Express? I think owner occupied was 660 on that one.
Yeah, I'm not sure, but you can get qualified. It's a soft credit pool again.
Yeah, owner occupied was
Rich can send you the link. It's blockchain, everybody. It's the coolest thing ever. They verify who you are and you're approved. It's like taking out like a SoFi personal loan. You can get approved in as little as 5 minutes. But here's the one caveat. If you currently have a equity line of credit, okay? If you currently have an equity line of credit on the home, it's an immediate denial. You can't have any other liens other than the first mortgage on your property. Okay. So if you already have an equity line, you want to pay it off, that thing doesn't work.
Peter, I thought they expanded to a third lien position on that recently.
I'll have to check. I know it didn't work recently for one of my clients, but I'll look at that.
Yeah, I know they do investment property under that program, but they'll say, essentially they say, guys, that they'll go 70% loan to value, provide an equity line of credit on investment property. I think because as Peter says, it's blockchain like, everything, and I mean everything, is done via the web. They're doing automated valuations. They're checking the title through the web. They're checking the clients through the web. Ultimately, I believe because it's an investment property, their evaluation model for the value is very, very conservative.
Yeah.
So you're really going to be looking for somebody probably with more like 60% loan to value for them to be able to lend on that. And a higher score, I would say probably they say 680, but I would say the scores probably have to be north of 700. But a line of credit on an investment property is not, I mean, it's almost impossible to get anywhere else.
Yeah.
Oh,
So
Adeline's
yeah,
got a question. Go ahead, Peter, but I'll get to her question.
yeah.
in a
So
second.
just real quick on that too, everybody, like if you have a client that's like not computer savvy, do not do it. If you have someone that's like a parent that's a baby boomer, you got to sit there and do it with them. Okay. Don't let them do it. I've had a couple really bad experiences. So, but hey, marketing collateral, like we talked about, become a partner. Send, Rich and his team an email. I'm sure they're going to follow up with you anyways. Flyers, social media graphics, emails, brochures, presentations like this. Rich has got it all. He can go out and do presentations for investors or to a financial planning firm or to a CPA firm. Get them involved. And again, the more you market this, the people will come. Okay. It's just that what people don't know, they don't know.
Peter, I got a question from Adeline that came in. Adeline is one of the things she's very good at is short sale negotiations, but she had mentioned what equity loan product would be helpful to our many clients who have silent or partial claim liens to cure their COVID forbearance periods. I think what she's referring to is, during clients went into forbearance, and then as they were getting out of forbearance, that chunk of payments they didn't pay, they punted it to the back end of the loan. So now you've got the regular loan, but then you've got an extra 38,000 or something sitting in their forbearance. I think what she's asking is, would we be able to do an Equity Express, let's say, or some of our other equity line investors, and go get a line to pay off that forbearance fees.
I'm really not sure on that, to be honest with you.
That's fair. I could look into that for you, Adeline. I'll write the question down.
Yeah, that would be a probably a case by case deal, depending on what's on that credit report.
Right. All right. Yeah, we'll look into that. So I'll reach back out to you. Perfect. Unless we have any other questions. Interesting. Yeah, she mentioned that that forbearance piece isn't going against their DTI. In other words, that back piece that they punted out there. So I'll look into that for you, Adeline. If we don't have any other questions, normally what I will do is talk about our next event. We don't have anything scheduled right now for November. We are probably, and we'll take your email response or your text response. We're probably going to be doing a budgeting class, and we were considering doing them more one-on-one. I'm going to finalize the building out, not a budgeting class. I apologize. It's going to be a 2024 business planning class, which we've done in the past, but we're actually changing it up a little bit to apply to this market and also to be a little bit more one-on-one focused. So if you're interested in that, reach out to us. I'll have everything finalized by this weekend on it, and we'll start marketing it out to you guys next week. And Becky says, Gabby, thanks for the lunches again. We do appreciate it. Clara says, hey, it was great information. Peter, great job covering it. I know we had a lot of material and we went a little bit over. I appreciate you a ton. And yeah, so, and the moral of the story is, don't let anybody turn down. It's no loan left behind. So if somebody gets turned down, let us have another crack at it. We've got a pretty wide product variety. And with the variety of products, you guys can go out there and get more business. So again, appreciate you guys all. We'll get more information. Gabby, if you can, Jessica, we'll get you Gabby's information directly. I think Tony saw that. And then we'll get more information out to you guys on the product. So again, Peter, thank you. Last but not least, none of this would happen without Tony. He keeps everything together for me and gets this stuff going. Gabby's information's requested. We've got to make sure that comes out to you. So, all right, guys, have a great one and take care, guys. Bye, Peter.
See you guys. Thank you so much.
Oh, there's Gabby's information. I'm going to leave. I'm going to keep us here while Gabby, in case anybody needs to copy that stuff down. So So that's good. Great
great
job,
day.
Peter. Appreciate you. There you go. That's good. As people leave out, so Gabby's information. We'll make sure Gabby's got your contact information. Oh, she went to her corporate office. Nice. So you're muted, but you went to your. Yeah, that's good. So all right, good deal. Thank you guys. Take care, everybody.
Thanks, Rich. Thanks, Tony.
Of course.